Welcome to the Forex and CFD Market Focus Report for Wednesday, September 25, 2013. Let's go ahead and take a look at our calendar for today. Earlier today we saw a pullback in the Australian skilled vacancies, possibly indicating that the labor market in Australia continues to worsen. The unemployment rate in that country is expected to continue to increase and keep RBA on its toes with an expansionary monetary policy. We saw a pickup in business confidence in Japan overnight. Small business confidence rallied to 49.8. In Switzerland today, we saw the UBS consumption indicator pull back to 1.32 from 1.41. And in Germany today, we saw the GfK Consumer Confidence Survey rally to 7.1 from the previous reading of 7.0. This is important. It is one of the reasons why the euro is moving higher and outperforming many of the major currencies today. We also saw in Japan the machine tool orders ticked higher but still remain negative year over year. We have some CBI data due out in the UK today. And in the US, we're going to take a look at some MBA mortgage applications. The big data in the US today, of course, though, will be durable goods orders. They are expected to increase, as we can see here from some forecasts. We'll see if that is in fact the case. And then we also have some new home sales data. We saw some Case-Shiller house price data this week, which indicated the U.S. prices are moving higher, but are still not gaining a lot of momentum. And of course, for the energy complex, we're going to get our weekly Department of Energy crude and distillate inventory supplies. Supplies are expected to be around an 18-month low, so we will see what happens with those data. Let's go ahead and take a look at some other asset classes. Here we have a daily chart of gold against the US dollar. We can see gold is currently trading around 13.22 and moved higher yesterday after stopping just short of testing the $1,300 level. We also see silver is a little bit underwater today, trading around 21.66. We can see yesterday that silver had an up day, one of the few up days it's had in recent daily trading sessions. So we'll see if the metals complex can recover a little bit and move higher. Some gold data, we saw Russia and Kazakhstan add reserves to their war chests in the month of August, according to IMF data that came out. Move over to the energy complex. Here we have Brent crude. You can see Brent crude is extending its gains from yesterday, trading as high as the 109.54 area. We're going to see if Brent can continue to move higher. Possibly working against crude is the ongoing talks between Russia, the U.S., and Syria concerning Syria's disarmament of chemical weapons. Of course, any sort of perceived tension in the Middle East will contribute to a higher price of oil, so any success in those talks could lead to a dampening of demand for oil. We also see an improvement here in the price of West Texas Intermediate, currently trading right around $103.50. The West Texas Intermediate did gain some late ground yesterday, and today's early action is a continuation of that. But as we can see here, this downtrend channel, the price has been depreciating over the past several trading sessions. Some traders are calling for West Texas to trade as low as the 100 figure in the near term, the $100 area. Let's go ahead and take a look at some FX action for today. We can see that the euro is the main beneficiary, main winner across the board today. It's outperforming all major rivals. You can see the yen is also quite strong here today. We're going to look at a chart of that in just a moment. Over here we see the New Zealand dollar under continued weakness, some significant selling pressure in Kiwi, and then we also see some selling pressure in the Australian dollar up here. Let's go ahead and take a look at some charts. This is a daily chart of the US dollar activity index. You can see it's hugging this blue horizontal zero line. No real indication of any sort of intraday trend for the US dollar at this point in time. Yesterday in the US we had remarks from some Kansas City officials, including Pianalto and George. Tomorrow we will have remarks from Kocher Lakota, the Minneapolis Fed president, and then some additional remarks from Fed officials, including Dudley and George, again on Friday. So we will pay close attention to that for any indications as to what the Fed may be thinking with regard to its QE taper. Over here in the euro, we said it was outperforming, and in fact it is. The euro is the best performing currency intraday. It has a nice upward trending bias. One of the main reasons why the euro is outperforming, other than the better than expected German GfK confidence data, is the fact that ECB officials are on the wires yesterday and today, indicating that in fact the ECB will provide ample liquidity. Some of the long-term refinancing operations, the so-called LTROs, will be expiring early next year. The markets are a little nervous that there may not be ample liquidity in the system. Yesterday we had Draghi, the ECB president, come out and support the notion that the ECB will provide ample funds and liquidity and reserves as required. And we had several ECB officials out since that time indicating that the ECB will do what's best for the markets. So that is supporting the euro here today. Looking at our Japanese yen daily activity index, we can see the yen has been stronger for 3 or 4 consecutive daily sessions. That is because we are seeing an unwinding of some large carry trades that were primarily financed with the Japanese yen. So earlier traders were selling yen and buying higher yielding currencies such as the Australian dollar and the New Zealand dollar. We of course are now seeing a drastic unwinding of those carry trades. So the New Zealand dollar and the Australian dollar are being sold and the Japanese yen is being repurchased. In other words, those Japanese yen shorts are being covered. That is leading to a stronger yen. In further support of this, we see the yield on the 10-year benchmark Japanese government bond is now at its lowest level since May. So that indicates more people are buying Japanese government bonds, more investors. So they are taking the proceeds from the carry trades as they are being unwound, and they are buying Japanese yen and using those Japanese yen to buy Japanese JGBs. Let's go ahead and take a look at the British pound. We of course see the pound moving higher, another nice intraday trend higher, upward bias for the British pound. Let's go ahead and look at the Swiss franc. The Swiss franc is also moving higher, so we see a nice upward intraday trend starting to form in the Swiss franc. Yesterday it was underwater, and today it is moving higher. Of course, this week we had comments from Swiss National Bank officials who pledged to keep the euro above 1.2 Swiss francs. Continued verbal intervention out of the SNB. As we mentioned, we have some drastic selling in the Australian dollar. It's a very nice downtrend here. Some good clear downward bias in the A dollar. The Reserve Bank of Australia released a report overnight, stability report, and the markets reacted to that. We also had some comments out of China overnight. One official indicating there that the Chinese economy may in fact already be larger than the U.S. economy. We'll keep an eye on some of those dynamics. Canadian dollar, we saw a nice move higher, a little bit of a trend there, but the Canadian dollar is a little bit underwater here today, a little bit of a downward bias. We'll continue to see if the C dollar moves lower as it has for much of the second half of September. Finally, our New Zealand Daily Activity Index is way below water here against all major currencies. We, of course, saw in the second half of August and the first half of September, the first 3 weeks really, the New Zealand dollar Kiwi really outperformed the market, as we can see above this blue horizontal line. However, in the past couple trading sessions, the Kiwi has moved lower. One of the reasons that contributed to the Kiwi moving lower, we saw a worsening of the New Zealand trade balance overnight as New Zealand exports fell by more than 500 million New Zealand dollars. So any sort of negative data will continue possibly to keep the New Zealand dollar on the defensive and lead to some more of those carry trades being unwound. We talked about a weak New Zealand dollar. This is an example of it. This is a daily chart of the British pound against the New Zealand dollar. We picked this chart to share with you today because we wanted to show you that the British pound has just taken out a major level of resistance coming in here. This blue horizontal line that we're mirroring here is the 194.68 area. That is a 50% retracement of the move from the July low, which is down here, all the way up to the early September, late August, whatever it was, high for the British pound. So we took out a major level here today, and the next level that we are focusing on is about 80 points higher from here. It's this red line. It's a 195.70 area corresponding to upward technical resistance. Moving on to our next chart, this is a daily chart of the dollar against the Japanese yen. We highlighted this chart today because the dollar continues to orbit this 98.66 area. This is a very important technical area because it is the 50% retracement of the move from July down to the July high here, down to the August low here. Any further continued weakness in this pair, we're going to see a test of this yellow uptrend line here, but we will see a test basically of the 98 figure. That's this red support line coming in just below the 98 figure there. And any additional weakness for dollar yen, we will see another major level tested, possibly down around this 97.15 area. So as the Japanese yen continues to appreciate across the board, we might anticipate additional dollar weakness in this currency pair. This is a chart of the euro against the Australian dollar. This is a daily chart, and we can see some considerable buying pressure from the euro here today and selling of the Australian dollar. The euro took out this moving average that we can see in the purple line. It also took out some resistance that was coming in right around 143.86. And then it took out another resistance line. It took out the Fibonacci extension area right up around 144.40. Above this area, any sort of additional upward pressure on the Euro-Aussie cross, we would expect a test of the 145.09 or 145.17 area as our next upside targets, followed by the 146.0510 area up here. That's this red horizontal line. Finally, we want to spotlight a cross rate we spoke about yesterday. This is the Canadian dollar against the Swiss franc cross rate. We can see some additional selling pressure here today. It came in right around some Fibonacci resistance area that was right around the 88.68 area. We spotlighted that area yesterday, and then today we saw some shorts covered, some buying interest come in right around the 88.26 area. That corresponds to the 76.4 retracement area that we saw coming from the low on Monday up to the weekly intra-week range high of 88.83 reached yesterday. So this was a very, very nice technical move again today, resulting in about 40 pips of profit if you were alert to it. We'll keep an eye on this cross and all the other cross rates. We thank you very much for tuning in to our daily Forex and CFD market focus report. Thank you.